All right. Well, hey guys, we did something totally brand new this year for Venture and for Forbes. Just a few minutes ago, we published this first ever Midas List Europe of the top 25 investors in Europe and Israel. I'm Alex Konrad, editor of the Midas List International and this European list. And I'm really excited to have 3 members of the inaugural list on stage with me. So thank you guys for joining me and congratulations.
Thanks very much.
Thank you. If I can't get a Michelin star, this is good.
Yeah, so everyone, if you're going to be on your phones, you might as well go check out the list and tweet it out with hashtag Forbes Midas. In the meantime, though, I thought before we can get into some fun stuff, it would be interesting to hear you guys just kind of give your first reaction to the thought of what makes an exceptional VC in Europe right now, as opposed to maybe, you know, the run-of-the-mill who are trying to make this list next year.
I mean, I'm happy to kick off. I think, you know, probably us being at that sort of bleeding edge of investments and, you know, taking those big risks at the seed, you know, pre-Series A level, I think the risk appetite of venture capital as a community, as an asset class, has dramatically improved in the last 10 years. And you can see that, again, across every stage. So, and I think, you know, similarly to what I grew up in the US, so I probably have a little bit of a bias of seeing, you know, that industry mature in the US, but, you know, what you saw was a lot of concentration around winners in the US, and I think, again, you're seeing that in Europe, along with that risk-taking appetite, is the concentration on making the kind of European or global winners, you know, out of any given country, whether that's, you know, Germany, UK, Sweden, or wherever it is across multiple industries. So I think those two are probably key factors in the rise of what we see in VC in Europe.
Go ahead.
Yeah, I would isolate 3 variables, but one in specific, I would say, pertains to Europe, and that is hustle and hunger. The others, I would say, it still remains a people business, and as much as, you know, we find companies through data science and other techniques, people do business with people. It's been mentioned on the previous panel. And the third thing I would say is curiosity and common sense. So while we're looking on the cutting edge of things, we also try and stay grounded and actually back businesses that are you know, going to go somewhere. But on the European point, I would say the difference between Europe and US is that we have, you know, 27 markets in the EU. And you just have to get off your bum. You have to get on an airplane. In many cases, you travel day there and day back for 1-hour meeting. And, you know, you don't sit on the top of the castle, on top of Sand Hill, and sort of things come to you automatically. So I'd say that's the one thing about Europe. Companies are born anywhere, sort of from east to west and north to south. And you just have to sort of move and be hungry to go and meet the most interesting entrepreneurs.
That's a good point, and I think you are sort of the epitome of hustle. So I guess you picked that, you know, with some inside knowledge. From my perspective, I think when you, it's sort of, there are different aspects to it. One is, what market do you pick, and is that fast-running water? So that helps a lot. But to me, once you've found an interesting market and a set of interesting opportunities, the question is, which model and which technology and which team, if they succeed in their initial plans, could then go on to build something very, very big? And the way I think about that is, what's the implication of this if it works? There's always the chance of failure. We all fail plenty. But I think that distinguishes the investor in companies that become, you know, iconic or important, or at least valuable, if not the first two. So I think that's an important sort of aspect. To build on the point that Jan's made about, you know, people work with people, I think you need to be the sort of person that entrepreneurs want to work with, and when you give them feedback that's on a plan of theirs that's difficult or contrary, that you know how to put it in the right way for it to be impactful and effective, rather than just smart but annoying, because we're all capable of being a bit annoying in that respect. So I think really having a sense for people is important. There are lots of other aspects, but I think as a sort of an individual investor, that's what counts. I'd also talk a little bit about the firm around the individual. We always give advice to entrepreneurs looking for their Series Bs and Cs and so on, that they should think about the individual as well as the firm, but the firm matters a lot in making us all successful, I suspect. So one of the jobs of the VC is to bring the best quality resources to bear as efficiently as possible for the startup that they are investing in or courting. And if we share information well internally, which we devote quite a lot of time to doing at Mosaic, then the question is not who does Mike know, but who does everyone in the room know. And it may be that someone who's just joined, who we've recruited, and we actually don't even know who they know, that they may come up with the goods regarding the best possible resource to help a specific situation. So there's some thoughts there.
And I mean, I think in the day and age today, that's compounded now, right?
Yeah.
With what the last panel was talking about with network effects. So compared to 10, 20 years ago, when it was one individual, that was that sort of Midas list person. I think it is much more around the firm and what the power of, again, larger networks and a firm can bring rather than just one individual contributing to a company's growth and success.
Yeah, well, I find it interesting. You guys come from such different sort of fund stories. I mean, Index has become so big with its fund sizes and a large partnership now across a few offices. Then you've got sort of Seedcamp, which is, I'd say, almost more entrepreneurial with you guys, just a duo, and Mosaic, younger, maybe somewhere in between.
I love it when you call me younger. That's
Well, as a fund. I think it's interesting, the notion of sort of flying around finding deals. Do you think that changes based on the size and the length, duration of a fund, or do you guys kind of have to be equally proactive, do you think, in finding the best quality deals?
I mean, we're still on our first fund. If Index feels a need to hustle, then we sure as hell do. And we do try and cover the ground, and you've got to like traveling to do this well in Europe, as Jan said. One of the things that requires as a firm as well as an individual is constant reprioritization, and knowing when it's worth jumping on a plane for the hour-long meeting somewhere that you weren't otherwise planning to travel to that year. So again, operating as a group to figure out that's worth the time. You don't think of the time as just your own, it's the firm's time. Then that's very powerful to help, if you have partners who help you do that.
Yeah, I would add to that that today more than ever before, entrepreneurs have a choice, and they have a choice both of the firms they work with, but also with the individuals they work with. And working as a team and sort of hunting as a pack is one of the things we try and encourage. Certainly the era of a sort of a star culture, which is perhaps slightly more American than European, we feel is overplayed, and entrepreneurs have become smarter, rightly so. They have the choice, and therefore they will sort of select their investor on all these different dimensions. What can you bring? How can we work together? So I think it's really important, no matter what size you are, to stay humble and grounded, and sort of run around with the same intensity.
And I think, competition's always growing. So I don't think it's just, again, in Europe, I would say, there's so many more kind of playing in the venture space, but we're also competing, in a sense with crowdfunding, with angels, with growth funds that are going downwards, or private equity and sovereign wealth funds that are getting more directly into action and so forth. So I think as much as your brand improves, and I think the quality of what comes in through the door, improves, you're getting into more and more kind of highly competitive situations at every stage. And that nature of that competition isn't static. It's really growing and changing every year.
So before this list came out, I spoke to some of the sort of presumptive members of the list, including your partner, Jan, Neil Reimer, who one of the interesting things he told me was he felt like in the last maybe 5 years, smaller cities in Europe have really benefited from the decreasing cost to start a business, the easier way to sort of outsource engineering talent. And so he said that, cities like this, Lisbon, but also, other smaller cities around Europe and Poland and other places are suddenly on the radar for you guys. It's not just London, Paris, Berlin. I'm curious, what does that mean for all of you, and how do you avoid just basically spending your whole time watching, companies zoom by on the highway and not actually being able to be decisive?
Yeah, I guess Neil's right. Businesses can be created anywhere the cost of starting a company has gone down, and therefore we have to look broader as to what could be. And it's one of the amazing things about Neil is to sort of imagine what, he's got this imagination and creativity as to what the upside could be. And really that leads you what I want to point out is one of the most important characteristics of a VC is to kind of dream what could go well, which Neil does exceptionally well. And that sort of leads you to remote corners of the world. It leads you to discover new industries. So I guess as the sort of the bottom of the pyramid, the base of startups being created gets wider, it sort of places a premium on selection, on really looking for the characteristics of the right markets, the characteristics of founders that are truly exceptional, that are really reimagining industries and really aiming high to rebuild industries. So on the one hand, I sort of do agree with the premise of the question, sort of, is it getting harder? Because mathematically, I would say Europe is seeing 10 times more startups than a decade ago. And I would say that's not a bad thing. That's a fantastic problem to have. And it just places an extra sort of hurdle on us to be smarter and being able to filter out and sort of create this kind of selection skill to pick out the winners who really don't want to just sort of incrementally improve the underlying industries, but sort of fundamentally reorganize them. And as much as there are more and more good businesses, I would say what we're looking for are the exceptional businesses, and that game doesn't change.
I'm going to try and reduce your question to practice a little bit. So we're a Series A focused fund at Mosaic. Someone say traditional Series A, because I guess that's Series A stretched a little bit.
So not a 60 million Series A.
We've done it, but we've put Series A amount of money into that sort of size Series A. We rely on the best seed investors to sort of help us navigate the landscape. Our job is to identify those people and have good relationships with those people and make sure we stay in touch, which doesn't have to be physical all the time. So there's a sort of, we rely on the seed funds to filter to a degree. As Jan mentioned, there's also sort of a data science effort combining as many data sources as possible to sort of find signal amongst the noise, which I think is becoming table stakes amongst institutional funds. And then there's thematic work as well. So it builds inefficiency into this geographically dispersed market. But my partner Toby is going to. If I surface a healthcare opportunity in Germany, he's the right person to meet that company. Now, the next person to go to that town, which by the way doesn't have to be Berlin. There are other parts of Germany that matter. We'll meet the company, but really we've got to get Toby to that company as quickly as possible. It's not about, I've found this, someone I've built a relationship has found, has suggested an interesting business in Munich. I've got to filter that to the right subject matter expert. So you've got to sort of be prepared, sort of have a frame of reference to know how to winnow all of this stuff down. And you learn, and by the way, you also learn, if you don't mind me saying, you learn there are some seed funds who are very realistic and they say this is a good company for you or this is a good fit for Mosaic. And then there are some where everything is good. And then you just learn that you've got to figure it out for yourself.
Yeah, and it's a virtuous cycle. So in terms of us, we've been methodical about who our LPs are. So we generally haven't really gone to fund of funds. We have about 30 plus VCs and angels who are our LPs. So that's a huge, including our founders, our alumni who are our LPs as well. So it's a painstaking process to recruit 60-ish LPs, but I tell you, the dividends pay for the next 10 years, at least the first 3 or 4. So our LPs are really part of our filtering process. And if you look at our top 5 companies in our most recent fund, InsurTech business out of Zurich came out of a ex-alum connection. UiPath, which is a Bucharest, Romanian business, came out of one of our LPs. Estonia always, and then I think one of them is UK based. So I mean, we use that as a filter. I think at our stage particularly, it's really, really hard. I mean, give you an example is Revolut. When they came to us through our, application process, which TransferWise has come through, and Deliveroo and some others, Deliveroo, which we passed on, for example, Revolut, I mean, the guys were going out with a terrible PowerPoint saying, we want to have a card for backpackers. And we kind of just were like, I'm trying to dream big here, but I don't get it, like a credit card for backpackers. But there's something about founders, right? And I think we're always learning to bet on founders over anything else maybe, is we kind of said, well, Nikolai is just really interesting and sort of crazy enough that maybe there's something a lot bigger than backpacker credit cards. And so we did invest into Revolut, and it's had the trajectory that we all probably know of now. So it's just extremely hard at that kind of 2 people, terrible deck, pre-product, kind of how do you bet that that's going to be that future winner?
So when I'm based in New York, when I talk to my circles in New York and Silicon Valley, I feel like the talk is about there being too much money, too much dry powder, and how that affects the startup ecosystem. And I'm curious, how would you guys compare the efficiency of the market today in Europe? Do you find that the good companies tend to all get funded and there's an adequate amount of money, or what's happening sort of, comparatively?
I mean, to kick off, I think, Series A is harder. I think we're definitely seeing some large Series A's. So as I said, there is much more of a consolidation of capital as well, towards what's really striking out. So I'd say the excellent and the great bordering on excellent is easier to get funded. There's a lot of competition for that, for who wants to fund those companies. I still think Series A is not it's not a place where you're proven as being excellent, and a trajectory of the business can either be downwards or upwards, sort of at Series A level. So I still think, given that's such a bottleneck, we aren't necessarily funding all the sort of best Series A businesses yet.
Well, I agree, and so to put it simply, growth capital is global. You've invested all over the world, which sort of as an example. At Series A, for a company that doesn't have easily digestible metrics that demonstrate traction, where you need to sort of really understand what a project is attempting, it's quite easy to miss some of the best technicians. But I think the best entrepreneurs who are more than sort of just technical do get funded. So there's sort of the entrepreneurs who are less obvious, who are more technical initially and may grow over time. That's sort of, I think that's the sort of micro segment we can miss.
Yeah, I think you get 2 different answers depending on whether you look at it in absolute or relative terms. I would say in absolute terms, you probably see more sort of crowdedness at the very late stage of the spectrum, with sort of lots of growth funds and super growth funds and follow-on growth funds after the growth funds, really sort of chasing whether the logos or the very premium assets. And again, no surprise, because the empirical evidence shows that companies can grow to 10, 20, 30, 50 billion plus in private hands and still continue raising capital. So I think it's that later stage that's probably busier than the earlier stage, whether that's seed or Series A, which I find most attractive, and that's also possibly because of the venture economics of how Series A funds work. You cannot sort of keep increasing the fund size forever. The relative argument, I think, is more interesting because yes, there is more capital, but it's also relative to the opportunity. And a decade ago, there was one more than $1 billion outcome, which was Skype in Europe. And today, there's more than 25 of them, and many more in the making. And this trend of, and you alluded to it, Alex, in the first question around sort of how Europe specifically stands out, you implied in relation to America. The fact that we see US capital coming to Europe, in addition to the European capital being raised, is a sign of opportunity, and good opportunity attracts capital, and we like to see that.
But is it distributing sufficiently equally throughout Europe? I mean, 18 of the 25 people on this Midas Europe list are based in London. And from London, you can fly pretty much anywhere. So does that make it hard to be a up-and-coming investor in Berlin or somewhere else? And does that create a top-heavy ecosystem?
Actually, I think if you're an up-and-coming investor in Berlin, I think there aren't enough of them, and I think there's a disparity. So I think that's an opportunity.
But there aren't enough for a reason, right? I mean,
well, I think a lot of fundraising is backward-looking, and the up-and-comers may sort of have to bootstrap their funds or raise money from friends and family or whatever it may be. But in a few years' time, if they execute well, they'll raise institutional capital and they'll have their own local funds. I mean, if we were, just to pick Berlin as an example, if we're a small firm, but even if we were a bit bigger, we would choose to be co-located together. We think the partnership matters, that we want to be in one place, but Berlin would be a logical second place. So some funds are setting up satellite offices in Berlin, as well as there being sort of the first groundswell, or I guess second groundswell of local talent investing in Berlin. So I think I do think that that the tide will rise, but it's because LPs are a little bit naturally backward-looking. It takes a little time to, for the ecosystems to catch up, for the investors to catch up with ecosystems.
Yeah, and I would totally agree with that. And I would just add that on the earlier stage, of course, businesses go in ecosystems and clusters, and then the clusters sort of have successes, be that Just Eat and King in London, and a lot of those founders or former sort of management teams go on to do more things and angel invest and so forth. So you get that ecosystem effect, but you can play the argument in reverse and look at the stats, and you could sort of point out the smaller countries produce the very most resilient companies that sort of are forced to go global out of the get-go, and whether that is Netherlands with ADN, and before there was Global Collect. You look at Denmark as a small country where Just Eat originated, Navision, Zendesk, Milestone. You of course look at all favorite companies of Reshma's from Estonia. You look at Portugal. We were just debating with the Minister of the Economy how Feedzai, Talkdesk, Farfetch have come out of here, and you could make the list of the smaller countries. Czech Republic having produced AVG, Avast, number of outcomes. So if we believe the trend that companies are going to be distributed, and if this is the starting point, then the future is only going to, or likely going to, show us more of those outcomes coming from all over Europe.
Yeah, and just as a stat, although 90+% of our companies are UK incorporated, it's done so because of ease of incorporation, the labor laws, option pools, and things like that. 80% of those companies, nationality of the founders is non-UK EU. So they're moving into the UK for historical reasons. I know we're not supposed to mention Brexit, but given Brexit,
Brexit was a topic that these three said beforehand was played out.
Yeah,
and yet here we are.
We don't mean it's concluded. It's just that we can't bear it.
We can't talk
anymore.
about it. But so for the next 5 or 10 years, as that issue plays out, we'll see where those ecosystems really start to have much greater density than perhaps London.
You made sense, but I was rude and interrupted you. Guys, so a couple companies you mentioned just earlier, Jan, relocated to the U.S., like Talkdesk. Is that a problem? Is that a concern that the very best European companies will, as soon as they can, move to Silicon Valley, and even as we globalize further, maybe just take investment right away from Silicon Valley or from somewhere that isn't close geographically?
I guess I would make a provocative statement to say that geography doesn't matter anymore. And if I try and unpeel it, I would say companies move for three reasons. One, for end markets and their customers. They move to hire people, and they move to raise capital. So I guess we sort of beat the dead horse around capital enough. Capital is pretty fluid, and European investors, sort of all of us here included, invest in the US, and US investors come to Europe. So it comes down to end markets, and you could say, look, Europe actually does resemble US to a large degree. I mean, there's no single market that has got 300 million people, but Germany has got close to 100 million people, and so on and so forth. So if you want to be global and you start a company global from the get-go, it's just a natural move to want to conquer the US market. I guess similarity of language or business culture, and obviously the talent pool is deep, and in many cases deeper. But that's not to say that a lot of the European companies sort of de-anchor and move entirely. If you look at the experience of, for example, Zendesk, they did move first to East Coast, then to West Coast, and sort of the majority of people actually moved, as compared to Adyen, where all product development engineering stays in Amsterdam. So there's different reasons for moving, and I don't think there's sort of one rule. But what I would say is ambitious companies will go after those big markets.
I agree with all of that, and I would add that what I've been hearing more, especially in the last maybe year, 18 months, is European founders being very clear that even if they need to develop globally, which includes the US, often is starting in the US, from an engineering perspective, the West Coast is just so staggeringly expensive and competitive to hire in that they look at the sort of core of 10 or 15 developers perhaps that they've accumulated in their home market, who are amongst the best people in that market and who can continue to attract the best technical talent locally, and they're more likely, I think, or certainly they're very likely to consider sort of continuing to build engineering locally, and there are fantastic engineering schools all across Europe. So there are very few markets where we would say it's problematic to have a core of engineering locally.
Yeah, not much to add there.
So another of our sort of top list members I spoke to recently was Klaus Hommels at Lakestar. And Klaus had a funny turn of phrase for me that I'm going to butcher here, but he basically said that there's a hype cycle for startups that starts at a peak in Silicon Valley and then sort of steadily drops as you go east. So that New York is not quite as good as Silicon Valley, London is maybe not quite as good as New York, and then it sort of hits a low point in Eastern Europe before picking up again maybe in Asia. And so he was kind of, I think, sort of complaining that maybe the startups in the US get outsized attention, and similarly maybe investors. But I'm curious, do you think that's a problem? Do you think sort of hype, in the US compared to here would slow companies down in Europe?
This is partly a philosophical question, partly cultural. I don't think it's true that entrepreneurs in Europe are by nature modest. They're entrepreneurs. They tend to be unreasonable and ambitious people. But I think that there's our preference at Mosaic amongst the three founders is uniformly for substance over flashiness, and we would much rather that a company just builds, and unless it turns out that PR is an intrinsic part of their business model and important to them, then actually the ability to sort of generate that hype is not very relevant or helpful, and can be distracting. The other thing is just there are more investors in the US. There are more more bloggers. You know, there's, you know, you have more sources to do your role in the US than you would in Europe. You know, there's probably a reason that the Midas list is a quarter of the size in Europe as it is in the US. And
that's because it's new and it's a lot of work.
I'm poor old Alex.
Maybe a little different perspective. I mean, to the extent that hype allows you to raise tens of millions, hundreds of millions, you burn through that, and and that leaves your employees in a devastated state. Absolutely, that's a terrible thing, and I think we're better off for it in Europe to not have that. That said, seeing it from an early stage as our companies grow, sometimes that hype can be powerful for our companies or their competition, in that if it takes the oxygen out of the market in the sense of capital being all attracted to one company or a couple of companies, and that dries up the appetite for any more in that particular sector, then that's a problem. To the extent that hype attracts talent, especially I think scale-up talent, which oftentimes it can have substance alongside the hype, that's a problem, right, for others. So I think it is about perspective, and especially for the talent war or to some extent the capital war, that hype can really play against if you are understated and under the radar too much.
Yeah, I think, Alex, what you point out is a stereotype, and in many cases it holds true. But I think there's a dimension to disagree with that stereotype, which is that it is the market leadership position that is rewarded the hype valuation or the premium valuation, not the fact where you come from. And as there are many industries from either New York or from, I think more so from Silicon Valley, that sort of command that premium multiple and that hype aura around them, there are equally sectors and industries and companies that have come from Europe that have deserved that premium. One of those sectors is gaming, where outcomes like Supercell, worth more than $10 billion, or outcomes like King, worth more than $5 billion, are far superior in size as well as sort of the reward, the valuation, than sort of US companies like Zynga. And same goes for other sectors, whether that's e-commerce and fashion. If I think of ASOS, or if I think of parts of fintech, if I compare sort of market with FactSet and IDC and various data companies out of the US, market has achieved that really preeminent position out of London. So what I think is important is to look at the opportunity set globally and sort of, select opportunities out of the relevant market that are going to deliver that sort of premium outcome.
But I mean, take one of your best deals, Adyen, your very first deal at Index. It's a monster of a company. Revenue is huge. Do you think it is as well known in Europe and the world as, let's say, Stripe is to the US market, and then maybe somewhere in Asia? Does Adyen get buried a little bit, or just kind of sneak up on people more because it's coming out of Amsterdam and not Silicon Valley?
Yeah, I hope it's rubbing off on people that it's a really premium company. So the judgment is obviously subjective, and we'll see when both companies go public at some point, which one is sort of the premium one. Otherwise, it's just an opinion. So everybody obviously has their own opinions. But what I would point out is the fundamental business essence of those companies that you point out. Adyen works with very large, complex clients. That's Facebook, Dropbox, Netflix, Uber, Expedia, and so forth, that have very complex global needs, and their approach is therefore far more technical and far more sort of direct sale, complex integration driven, where Stripe serves the SMB market, or even from sort of the Soho end of the market up towards the SMB space. And therefore, it's a more of a marketing driven sort of go-to-market approach. And that's just a sort of a fundamental positioning of those two businesses, and therefore, in order to be successful, and by the way, Stripe is a phenomenal company which has achieved amazing things, but in order to sort of do well in their market, they have to sort of tailor their approach.
So this is for everyone. We've in the past seen some amazing sort of machine learning techniques, artificial intelligence come out of universities in Germany and the UK. Some big exits too coming out, like DeepMind. Do you guys see particular areas, it doesn't have to be AI, where parts of Europe or Europe as a group has some sort of competitive advantage on the rest of the world? And if so, what would that sort of area of tech be?
And I'll start with AI just because you've raised it. And I guess my view is we do have a seat at the table competitively. I wouldn't argue that it's the very best in the world, but there are 4 very, very strong universities, Oxford, Cambridge, Imperial, UCL, that are sort of producing very large numbers of incredibly talented people just in the UK. And as you say, there are pockets of excellence spread around Europe. So we are producing a lot of talented practitioners. But if you'd have said, I'm building a really great company, I'm using JavaScript, I wouldn't back you. Just a tip. And similarly, or not quite as extreme, but being able to understand how to put these techniques that these practitioners have been developing actually for decades into practice is the challenge. And the challenge for us is, what do we do with this talent we're producing? Number one. Number two, how can we induce the most talented creative people to take a more commercial approach than to be sucked, a more entrepreneurial and commercial approach than to be sucked into DeepMind or all of the large entities that have very significant AI teams. I think that's actually those are the twin challenges that not just us but everyone has globally in the venture world. So just to temper it a little.
Yeah, and in terms of application, again, in the real world, the AI-powered companies that we have, quite early stage, I see they're going after enterprise sales, because that's where, enterprises will have the kind of bandwidth and the financial power to actually implement, radical solutions in the back end, right? And that's a hard implementation. These are long sales cycles. So I think our concern right now is, seeing that, which is kind of brand new tech, incredibly talented, engineers and practitioners, marrying that to old school, enterprises who generally have the sort of 7-figure cash to deploy this, but it takes a long time. And I think if you again look at the US, you've got more homogenous markets. You generally have enterprises who'll deploy things much faster than you will in the European footprint, right? So I think, at least from our end, we're seeing it as more enterprise applications, and that's a challenge reminiscent of a decade ago. So yeah, I tend to concur.
I guess it's good to stay grounded when my favorite joke, sort of at a VC expense, is I don't know who said it first, but it's AI when you're fundraising and it's machine learning when you're hiring. So everyone pitches you guys an AI component, I'm sure. Besides AI, where do you see sort of the next great sort of exciting trend in Europe? Whether it's autonomous vehicles, drones, AR, VR. Is there any area that each of you is sort of particularly going to be watching in the months to come?
Yes.
All of the above?
Could it still be AI?
No, not at all. Yeah, I think it's AI-enabled drones. No, I'm kidding. So although that is a thing. The autonomous vehicle world was really a sort of, or mobility world is really an extension of, or an application of all of this machine learning, machine intelligence talent we've talked about. And there are, we're very, very interested in mobility as a theme. We've made an investment that's relevant in Nexar, which is an Israeli company, which I won't talk about now. But the point of what we were attracted to in Nexar is it could start to demonstrate how it operates by a consumer downloading an app for free, getting value from it, and a small number of them converting to paying on a monthly basis for this sort of what ends up as a sort of mesh network to enable drivers to understand how to operate safely drive safely in a city. So that had the magic of fantastic technology, but married to sort of relatively frictionless early proof points. So I think one of the issues in the autonomous vehicle space, which we're all very interested in, is the go-to-market and the time to proof of value. And one of the issues in AI in general is just how long, like what is the difference really between a pre-seed, a seed, and a Series A? Well, price is really the difference. But mobility is one theme that you mentioned that we're interested in. We're also sort of watching VR and AR, but VR has been a very tough space, and we think it's at least a year away. We're more interested in the potential of AR, which I think will be a layer on top of a number of applications rather than a theme in itself. It will be a technique is sort of how we view it. But we're interested in potential opportunities that could exploit AR.
Yeah, I would say there's still lots more to be done in the sectors we have been pursuing for the last few years, financial services included, insurance included. A lot is being joked about in the context of AI, but a lot of these companies actually do use various techniques, whether that's Adyen using that to catch fraud, or Robinhood uses that for sort of predictive suggestions, similar to what Amazon does. Sort of, you bought this, therefore you should look at that. And this technology can be used for better manipulation of all the data and information that is sort of produced, and just sorting customer data and transaction data. A lot is said about big data and the big data infrastructure, but what we're spending a lot of time on is sort of the use of a lot of data and what that could mean for credit scoring, for insurance assessment, for better customer care, and so forth.
Yeah, and I think because we invest 30 plus companies a year, we obviously look at everything and see what's the right fit for us. I mean, for us, I think some of the sectors in anything in automotive is harder because the capital requirements are so high from the get-go. So I think we tend to look at the more software application side of things for where we're going to put kind of sub a few $100K into the business as a start. So, but yes, across the board.
I just want to go back to what Jan said, which is these emerging themes that you asked about, they're sort of adding to the many themes that we're already sort of looking at. We pick those themes because we think they'll last for years rather than because they'll play out over a fund cycle. So something that plays out over a fund cycle, you've got to be very aware of the brevity of that sort of thematic interest. So we all have these underlying themes that, as Jan said, and that's sort of core to us. If all we are is on a momentum basis jumping on the next thing, then that's probably a hiding to nothing.
When it takes 8 to 10 years for a company to exit, it makes sense you don't want to chase a fad. Guys, I think we're out of time, but thank you so much. This was great.
Thank you.